Welcome, everybody, to our Monday edition of Moving Markets. This is Jeffry Dunyon, owner and founder of Safe Option Strategies. Glad to have you here with me on a Monday. It's late in the day. I'm usually doing this podcast much earlier in the day when the markets have only been open for an hour or two. We are right now about 1 hour away from the close of the U.S. markets today. And it's been kind of a crazy day. The Dow Jones Industrial Average has been up over 100 points. It has been down well over 100 points. The NASDAQ has mostly traded in negative territory and right now is trading almost 1.75% to the downside. In fact, it is 1.75% to the downside, exactly down 130 points. The S&P, percentage-wise, it's kind of reflective of the same thing as the Dow, down about 1/3% right now. Now, as we go into the last hour of trading, there's a couple of things. One particular thing that is breaking right now in the news, and that is that investors recently polled believe there is a 98% chance that the Fed is going to lower interest rates as a temporary fix to what's going on with the markets and what is going on with the trade wars. Nothing really new to talk about in the trade wars. The rhetoric ramped up a little bit, but that's going to continue to happen. China made some comments over the weekend about how it's all the United States' fault, and there wasn't a huge amount of pushback on that. It's kind of obvious to anyone paying attention that Beijing is the ones that they're the ones that reneged on some things that they had agreed to. And they agreed to them early on to give us the false notion that they were going to play along and they were going to do something that was more fair to everybody that they trade with. The reality is they just don't want to do that. I mean, China likes the way things have been working. They steal intellectual property of companies whenever they want. They force companies that do business over there or that want to have access to their markets. They force them to give up their technology and their intellectual property. They manipulate currency. We've talked about all of these things on the program on numerous occasions, and it simply continues to happen. And China wants it to continue to happen. It's we've had conversation before about how when you try and negotiate something, more often than not, you've got one party who's here and one party who is here. And the idea of negotiation is to get closer to here and get somewhere in the middle. Well, the problem is that to get to the middle, one party is going to improve their situation and the other party is not. The other party is going to lessen their position or give up something. That's the entire process of negotiating in a trade situation like this. And there's other kind of negotiations where maybe two parties come in on similar footing and they're just trying to get the best deal moving forward for both of them, and both parties may give up a little bit and both parties may gain a little bit, and it one of those things that kind of works out for everybody. That's not the case here. This is absolutely a situation where one of the two parties involved is in a lot better situation money-wise in terms of the deals that they work out than the other party. And the party that's trying to change that is the one that would benefit from it. That's the United States, and the party that doesn't want to change it is the one that would be hurt by it. So on the one hand, how do you blame China for not wanting to change? They've gotten away with what they're doing for so long. I say, how do you blame them? What you blame them for is all their crooked practices and all their cheating and lying that they do to begin with. That's what you blame them for, and then you've got to accept the fact that some of the blame lies on the part of the United States and a lot of other countries that trade regularly with China, and how they have allowed China to get away with this for so long. I'll mention it again. We've talked about it in this program before. China came into the World Trade Organization. I think I'm going to forget the date. Before tomorrow's presentation, I'll look up the exact date. I know it's been over a decade ago, maybe closer to 2 decades ago. China came into the World Trade Organization, and when they came into the World Trade Organization, they came in on a couple of stipulations. Number one, they would abide by the rules of the World Trade Organization. They were given some concessions. China at the time was considered an emerging economy. They weren't a third world economy, but neither were they considered a large global economy the way they are now. That's changed. That's changed dramatically. China has the second largest economy in the world right now, next to the United States, and it's just getting bigger. Their population is, what is it, 5 times that of the U.S. I mean, the United States has somewhere in the neighborhood of a 360 million population. China, I believe, is between 1.25, 1.5 billion people. So somewhere in that neighborhood of 4 to 5 times bigger population. It has the potential of being a much larger market than it is, and it's already the second largest economy in the world. As the Chinese economy has grown, and as it has strengthened, and as it has gotten more like, the U.S. economy in some ways, some of the concessions that they were granted early on by the World Trade Organization should have gone away completely, but the World Trade Organization allows them to continue because that's basically a semi-inept world government bureaucracy. It's not a lot different than the United Nations, which is 100% inept. But in addition to that, you've got China that has never followed the rules of the World Trade Organization. They've never followed the rules that are in place for dealing with other countries on the world market and on a global scale. And that's what this trade war is really about, is that someone, Donald Trump and the Trump administration, the United States, are finally standing up to China and saying enough is enough. We're not gonna continue to do this. We're gonna put these tariffs on you, on all your products that come over here. They need our economy, we need their economy. It's as simple as that. It would be beneficial for both parties to reach a deal. The problem is China's got to go backwards from where they're at right now to get to a deal, and they kind of whether they recognize it or not and are simply unwilling to concede, or whether they don't recognize it. They don't recognize the benefit of going back a little bit for how it's going to open up more trading with other countries and with other markets, and eventually China can continue to do what they're doing, and eventually no one's going to want to do business with them, and they will actually isolate themselves, and they will actually, it'll be to their country's detriment eventually. The challenge is, does the United States have the political will? And anytime you start a question with, does the United States have the political will, the answer is probably no. But do we have the political will to stay the course and stay in this fight until China has to do something different? The reason I would say probably not is because we basically have a 4-year election cycle. Every 4 years, there is a chance that we're going to change the executive branch of our government. And every time we run into that potential, you have the possibility that two very polar opposite ways of doing business in the world, one of them is going to succeed and one of them is not, in terms of running the country. It's if a Democrat gets back into office in a couple of years from now, I guarantee one of the very first things that will happen, and for all the absolute wrong reasons, is they will send a delegation, or whoever the new president is will go and meet with China and say, we're so sorry that you had to deal with Donald Trump and his administration, and we're gonna eliminate all these tariffs, and I'm sure we can work something out so that you'll play nice for the rest of for the rest of existence. And China will be like, hey, this is what we wanted. This is what we wanted. We wanted a soft, cowardly lion in the White House. We wanted someone who is not capitalist. We wanted someone who will just purely pander to a political base, and we will continue doing what we've always done. We will get away with what we've always gotten away with. We will continue to manipulate our currency. We will continue to steal people's technology. We will continue to force people to give up their proprietary information and their proprietary technology. And the markets will see a short-term boost from it. And then U.S. companies will continue to struggle, and they'll struggle with being able to do business in China. So none of that changed over the weekend. I don't know why I spent that much time talking about it, because none of it really changed over the weekend. The other big story going on today, the reason the NASDAQ is so far down, is that the Department of Justice is basically, and this is me paraphrasing, the Department of Justice is basically saying to Google, Facebook, Amazon, and Apple that you guys have dropped the ball severely on protecting the data of your customers. In the case of Facebook, they don't want to. I mean, Facebook maybe, and Google might fit into this category. Google might be a little more polished, a little smoother in how they present it. Facebook kind of, for all his brilliance and all of his genius, Mark Zuckerberg is really, really, truly out of touch in certain areas. I'm not saying that to take away from the guy's brilliance in what he's done with Facebook, but he's really out of touch when it comes to people's privacy. People sign up for something like Facebook. They have a certain expectation that the information they're providing is going to be shared with their friends, and that's the whole purpose people get on. That's the whole reason people get on Facebook, and they end up providing Facebook with information that they just, people's heads are kind of in the sand. They don't think that information is going to be used for any nefarious reason. Now, I don't know that advertising is a nefarious thing, but it is a violation of people's privacy. What happens is that Facebook will now sell to companies very, very targeted advertising. They will sell advertising that is very specific. If I went on Facebook, and in the process of filling out a profile, I told them how old I was. I told them how much money I made. I told them how much my house was worth, or whether I had a mortgage or not. I fill out certain information like that, and Facebook creates a profile of who I am. And they know from lots and lots of market research, or companies know from lots of market research, that they want, when they're going to pay for advertising, here's their best demographic. Their best demographic is the age group that Jeffry Dunyon fits into. It's the income level that Jeffry Dunyon fits into. It's the net worth and the kind of car that he drives. That, from a lot of market research, that's the type of person that our our advertising resonates with more. There's a greater chance that someone with those specific demographics is likely to click on one of their ads. So companies will pay a lot of money to Facebook to target people in certain demographics for certain advertisements. It's the way advertisement works. It's the way advertising has evolved, and it's very efficient, but it can be kind of costly. And this is where Facebook makes their money, and it goes way beyond that. There's algorithms. If I go online and I purchase something online, unless I have done some really specific things to protect my privacy, there's a chance that when I make that purchase, somebody somewhere is going to get that information, and I'm going to get ads now pop up on my computer that are more relative to that specific purchase. When I'm doing live classes with my students at Safe Option Strategies, it's interesting because sometimes I'll have a web page up, and I'll have a live page of a stock chart or an option chain or something like that. And I'll joke around with people because of the sidebar on that web page that has some advertising on it. I'll joke around with people and I'll say, "Oh, you can see where I've been shopping recently." My cell phone for myself and my employees, and my family, is through Sprint. And if I've just been online doing something with my cell phone with Sprint, there's an algorithm that captures that information, and I guarantee the next pop-up ad banner on the right side of my computer is going to be from Sprint. I can just about guarantee it. I'll put a little plug in here. There's a great online company for ski equipment. If you're a snow skier, check out Level 9, Level, the number 9.com. They are a fantastic online ski outfitter. Skis, boots, poles, winter clothing, ski clothing. I love Level 9. They're a local company here too, so they've got a store that I can actually go to and pick something up, even if I do order it online. I don't have to pay the shipping and have it shipped to my house. But during the wintertime when it's ski season, I'll joke around with my students. I'll say, "Oh, look, you can see I was on level 9, looking at a new ski coat, or I bought some new poles or bindings or ski gloves or something on level 9, because that's the pop-up ad that's over there. So as this information is gathered, it's then sold to these advertisers. That's where Facebook makes and that's where Facebook really makes all of its profit. The problem is, most consumers are unaware that when they use Facebook, or when they make online purchases, when they've searched out a website on Google, they make online purchases, they're unaware that details of what they have just done are now shared with other advertisers, or they're shared with a company like Google, so that an advertiser can go to Google and say, okay, I only want people, I want to send these ads first to people that have been on my website before. And Google has that information. They know if you've been on that website before. And so a company might pay a little bit more to advertise to people that have purchased from them previously. Or other companies might say, hey, I'm a competitor with level 9. I want to send this ad out to everyone who's clicked on their website looking for something in the last 48 hours. And they'll pay a little more money to have that specific a target audience. So the reason I'm sharing all of this, giving you a little lesson if you don't know how advertising works and how your data is shared. The Department of Justice has announced that they're going to open a probe and a deeper investigation into Google, Facebook, Amazon, and Apple. As a result, those stocks are selling off because people that invest in those companies, they recognize that this is where these companies get their money. They recognize that the profitability of Facebook relies on their ability to share this information with advertisers, or to target ads specifically at people who are more likely to open those ads online. And the average consumer, myself included, if we had complete and total control over who our information is shared with and who it's not shared with, a lot of us would choose to not share it. The system, for a lot of consumers, the system works in reverse right now. Unless you take specific steps, or you sign something, or you click on a box that very specifically says you don't want your information shared, then it's going to be shared. And a lot of people feel like it should be the other way around. They feel like my information should not be shared with anyone unless I have very specifically given consent. Now, sometimes we do give that consent when we check a box that says I agree to the terms and conditions, and it's stuff that we haven't read. Companies are supposed to disclose that kind of information. If you were to sign up for something on my website, you check a box that says you agree to the terms and conditions, and part of the terms and conditions are that I can send you more stuff. I don't send people stuff I don't send it into Google. I don't send it to other companies. I don't sell my students' information, or even people who have viewed my website. I don't sell their information. I don't sell their email address or sell lists of people who have checked out my website. But I do have a box that you check that says I agree to the terms and conditions, and that gives me permission to send something else out to you. And that's, I think people would be more comfortable. In fact, I think people are generally more comfortable with that. But when you've got 5, 6, 7 pages of fine print, and it's in legal speak, it's in a language that most of us don't understand, and you've got to scroll down through that. And then if you want to proceed, if you want to move forward, you've got to click something that says, I agree to the terms and conditions. When's the last time your iPhone did an update? And when you do the software, when you do your iOS update, or for Android, I don't know what they call it, but when you do your Android update from time to time, you've got pages and pages and pages that you could scroll through of information. I guarantee somewhere buried in that information, you can tell I haven't even read it. I guarantee somewhere buried in that information, you're giving them permission to share some data with somebody for some reason. But you can't move on unless you click that button that says, I agree to the terms and conditions. And so many of us are giving these companies permission to do stuff. It's chapters of legal speak that they don't understand. Companies like Google, Amazon, Facebook, Apple, it's going to be tougher for them to get this information and then to sell it to advertisers. The cost of advertising is going to go up, because when they are successful in gathering this information, they're going to charge more of a premium for it. Those stocks are selling off big time. They've got the NASDAQ down deep today. The rest of the markets are down, mostly on just the continuing fear of the China trades. Not as bad as, I mean, the Dow's only down 50 points right now. There is a little more than 25 minutes left to the market close. When we move into that last half an hour that the market is open, that's when anything can happen. You could see this market turn and see the Dow 100 points to the upside. You could see the Dow 200 points to the downside. That last hour, some momentum is going to be gained one direction or the other. If we only finish the 45, 50 points down that the Dow is right now, I think that would be something of a small victory and maybe an indication that the dust is settling a little bit on this overall sell-off that we've had. I think by the time we get to the end of this week, there is a good chance that we will have had our first positive week on the major indexes, at least on the Dow Jones and the S&P. I don't know about the NASDAQ, but at least on the Dow and the S&P, I think there's a good chance that we'll have had our first winning week in the last 7. We've had 6 weeks in a row where the U.S. indexes, specifically the Dow and the S&P, have traded negative for the week. That hasn't happened since, I mean, we're talking almost a decade ago, because we're talking 2010 was the last time that happened. So we'll see where we go from here. Now you know what's moving markets for today, and I hope you'll join us tomorrow. Thanks, everyone. Bye-bye.